All right, everybody, I'm going to do my legacy market review here. I'm going to take a look at legacy markets once a week. I'm going to round up the ones that I like to watch the most, and those are gold, the dollar index, the euro, the crude oil market, and the Nasdaq. And primarily taking a look at them from the monthly and the weekly time frame and see what's actionable on these markets right now. So, starting with gold, gold is quite interesting to me this week or right now, and I'll tell you why. So, first of all, you always want to look at a market, see is what is the dominant prevailing trend. It's pretty obvious in gold, but looking at the 52 period upsloping moving average, the dominant higher time frame trend is up, and then the red lines denoting the short-term market structure, the short-term swings in the marketplace, show us that the trend on the short term is in alignment with the higher time frame upward trend. Now, worth noting is that we did get a confirmed swing high here on the monthly. So what that tells us is that the short-term momentum is to the downside. But what's really interesting about gold right now, and I'm going to show you why I'm very interested in seeing what happens with gold. And basically, I think that if gold is going to continue its strong uptrend, I think it's going to happen within the next month, potentially. If price can get up to November's high, and that's the if here, that will confirm this swing low. So you see we've made a swing high. Now, right here, some people will call that a higher low, but if you followed my teachings, you know that as Larry Williams taught, we cannot utilize inside bars to confirm a swing point. So what that means is if price can trade up to this high, this middle bar's high, that would confirm this as a short-term low, which would be in alignment with our higher time frame trend, which would be a higher high and higher low, just the structure being bullish. And that would give us the high probability time to go look for longs on the daily time frame. And how I do that is I use my ducks in a barrel valuation with trend method on the daily time frame. So right now, nothing to trade on based on the monthly, but if we do get it into that level, I would be very, very interested in looking for longs on the daily time frame on pullbacks. Now, looking at the weekly, so what we see on the weekly is, again, what is the higher time frame trend? Well, upsloping 52 period, we're in an uptrend. Now, short-term weekly market structure shifted bearish when we took out this low. Now, what we see here is we also just made a lower high. So we're in short-term bearish market structure. But what's interesting to me and why I think gold could be at a pivotal moment if the bulls can show up right now is I'm going to show you why. You see, we put in this short-term high, lower high, mind you. Now, what's going to happen if this confirms? What we're going to have is a higher low. And in a super bullish market like gold has been, I would say that higher lows will be great signs to go long and expect a continuation of this uptrend. So what would need to happen is price would need to trade up to 2683.4 to confirm this swing low. And interestingly, that price level is the same level that would confirm a ducks in a barrel valuation with trend long. So what we see is uptrend, undervalued versus treasuries, undervalued versus gold, oversold on the stochastic. Those are our three ingredients that we need for a ducks in a barrel valuation with trend trade. So we have that alignment coming in too. So imagine how great these valuation with trend trades are. Putting them also with a bullish market structure in this case would just give the trade, I think, that much more legs and that much more confluence for a nice long, expecting a higher high, which would be trading up to at least 2760, which would imply, from there, a move of, it's not huge, but 3%. But, what I would be anticipating would be a continuation of the bull run. Higher high would likely be a pretty big deal. The biggest and best market structure shift will be when this high gets taken out. So that's what I'm looking at on gold. Going on to the US dollar. On the weekly chart, I actually don't think there's much I want to show you on the monthly. I'll just double check that first. So market structure, is bullish, nothing actionable though right now based on the monthly. So what I want to see here is if this swing high confirms by taking out this low. That would confirm a higher high, and then we'd want to see the bulls show up and put in a higher low here. And if we do get that higher low on the weekly, we're going to have higher probability entries on the 4-hour chart to the long side. So a bit of a wait and see on the dollar. Euro is the exact same. Interestingly, though, I wanted to point out what we see here is the dollar index made a higher high. Now, in a normal world, or what usually happens is these markets should kind of correlate to each other by euro making a lower low. But what we see here is euro made a higher low compared to the British pound, the CAD, the New Zealand dollar, the Aussie, they all made lower lows. So what this shows me is that there's a bit of divergence coming in between the dollar and the euro looks relatively or comparably strong compared to these other markets, these other currencies. There's a lot of currencies set up for commitment of traders longs. We have the euro, we have the pound, we have the Aussie, and the CAD, all set up for longs. This market structure tells me that the euro is going to be the one that's going to rip if we do get a confirmed trend change on the daily. So if that does happen, basically, I think the euro is going to outperform the other currencies potentially. So that's what I'm looking for here on the euro. Now, hopping on over to oil. Oil, not much for me to trade here on the monthly. The momentum has not, this short-term high is not confirmed. If price does trade down into here, we would have a confirmed short-term high, and which would not be in alignment with this upward sloping 52 period moving average. So not a whole lot for me to go off of on crude right now. And then on the weekly, it's just about as terrible as the monthly. It's just a flat 52 period moving average, no real trend. And you can kind of tell just by looking at it. I mean, it's just been consolidating. Worth noting, heating oil has a really nice commitment of traders long setup right now for longs on heating oil. Not too long ago, we also, or I think it was early November, we had a long setup on nat gas, which, I mean, that market rallied about 60% since then. So, the energy complex does appear to have some life coming back into it, but as of right now, on the price action perspective, nothing much to go on crude. Now, on the Nasdaq, interesting. I'm really curious to see what happens this week. We have potentially a swing high going on here, and what will confirm that is if price can trade down into this low at 21,006.50. And if that happens, then the short-term momentum will be to the downside, and then the next thing for me will be wait and see if we can get a short-term low that's higher than this one. And if we do, I would be confident taking longs in alignment with this higher time frame uptrend. So that's what I'm looking for on these legacy markets. I hope you find value in this video. If you'd like to hit me up on my Discord, shoot me an email, tradiustrades@gmail.com. We discuss commitment to trader strategies as well as dissecting the markets using market structure for the legacy markets, crypto and cryptos. So I appreciate you taking the time to listen and have yourself a great week.